Hi everyone, welcome to Late Night Stocks. I'm Gökhan and we are gonna talk about Pfizer today. Is this stock a buy after its COVID-19 pill? In order to figure out the valuation, we have to compare this company with other pharma giants like Merck. Probably this large cap company seems not so attractive to retail investors, but its earnings are exploding. After this COVID pill, the company seems gonna stay in the game after the pandemic. This is very important for the long-term investors. But should you buy this company instead of BioNTech or Merck? How about the overall performance of this company, and is the company gonna increase its earnings in upcoming years? Of course, as late night stocks usual, we are gonna look at the company's numbers. The company has $50 stock price as of today, but is it the top or the bottom of the new era? For the answers and more, please watch the video till the end. By the way, Pfizer or any other company doesn't support us, but you can do that. You can buy us coffee and find the link down below the video. As you know, Pfizer is an American company and has $281 billion market cap. This pharma giant is well established and pays 3.15% dividends. The company has a P ratio of 14, which is very reasonable. The stock price hit $50 in August and plunged to $42 last month. After good Q3 results and COVID-19 pill news, the stock price hit again an all-time high. Well, there are three options. It can go down, up, or can stay at these levels. Of course, in this video our mission is to find out the right direction. Let's continue with another pharma giant and COVID-19 pill manufacturer Merck. The company has 211 billion market cap and has a P ratio of about 30. This company pays, like other pharma companies, dividends. As you see from the chart, the stock price was stable until the announcement of the COVID-19 pill. We saw huge stock price jumps, but was the party over? Or better to buy Merck or Pfizer? Pharma companies largely affected from the COVID-19. We see the last 4 years revenues from the companies. On the left hand side we see the Pfizer revenues from 2018 to 20. We don't see remarkable growth rate year over year. On the other hand, Merck increased its revenues year over year until the pandemic. But when we look at the quarter over quarter results during the pandemic, we see the huge difference. Pfizer increased its earnings and revenues quarter over quarter, but Merck made a loss in Q4 2020, and its earnings are fluctuating. The balance sheet, or better to say free cash flow, is very important for these companies because the risk is high and they need a lot of cash to continue their pipeline projects. Pfizer had $30 billion cash and $40 billion debt according to its Q3 earnings. Merck had $10 billion cash and $26 billion debt. As you see, Pfizer had $20 billion more cash and $13 billion less debt. Okay, Pfizer stock seems a better pick according to these numbers, but how about next year? Both companies announced good results from their antiviral COVID-19 pill trials. But which one is better? Let's have a look at the news. Recently, Pfizer announced that the company to file for emergency authorization Tuesday for its COVID-19 pill. When we look at the details of the news, Pfizer pill reduced hospitalization by 89% among patients who started within 3 days of symptoms and also preventing deaths in a large randomized study. According to news from Merck, its own pill reduced hospitalization by 50%, although data was not shared on patients treated within 3 days of symptoms. As you see, Pfizer's pill seems superior to Merck's pill. I know you want to know the valuation also. I appreciate Pfizer because the company grants a free license to the not-for-profit medicines patent pool, which is backed by the United Nations. They will give this formula to low-income countries in Asia and Africa. But interestingly, this plan excludes some nations which have been hit hard with COVID-19, including Brazil, Jamaica, Libya and Iraq. When we continue to compare the pills, Merck sells its pills, or better to say its treatments, $750 in Japan. The Biden administration is expected to announce this week that it is purchasing 10 million courses of Pfizer pill. The price is expected to closer to $500 per treatment, although administration officials say the final decisions are not done. The agreement has the potential to generate anywhere from 15 billion to 25 billion in sales in 2022 if the pricing holds between $300 and $500 a treatment course. The calculation is easy because Pfizer wants to produce up to 50 million treatments, and 50 million times $500 makes $25 billion in sales. On the other hand, the competitor company Merck made a $1.2 billion deal to supply the US government with 1.7 million doses, which works out to a 712 unit cost for a 5-day treatment course according to contract. The cost of sales or manufacturing cost is important, and for a 5-day treatment course is expected to be $20. When we look at the chart, we see the S&P 500 index, Merck and Pfizer stock prices. After 2019, the S&P 500 index and Merck were parallel. As we see from the chart, S&P 500 index outperformed the both companies. At the end of the 5 years, the S&P 500 index was about 44% high, Merck was 28% and Pfizer was 3% down. The question is why Merck outperformed Pfizer. When we look at the oncology market, according to product sales 2019, we see a blockbuster from Merck named Keytruda, and the company made $11 billion from that. This was one of the reasons why Merck outperformed Pfizer stock. If we continue with Pfizer's top 10 products based on revenue in 2020, we see at the top Prevnar family. The company made $5.8 billion from that family. The sum of two top product revenues is equal to one product from Merck. Long story short, from 2016 to 20, Merck made more money from their products. Of course, pandemic changed everything forever. We see at the chart pandemic era quarterly revenue growths. As you see, Merck had about 10% growth and Pfizer is flying to the moon. I would like to talk about Q3 Pfizer earnings. Pfizer had strong financial performance and grew 130% year over year. When we exclude COVID-19 revenues, they had 7% growth year over year. Of course, this number is not so great in comparison to Merck because Merck growth about 10%. But I would like to point out other revenues. The company expects up to $82 billion revenue this year. As you remember, its revenue was about $42 billion last year. The company almost doubled its revenues. If we exclude COVID-19 vaccine revenues, the company expects to earn up to $46 billion this year. Pfizer is one of the winners of pandemic. The company co-developed a blockbuster COVID-19 vaccine and produced multi-billions. Next year, the vaccine revenues will be similar to this year, and in addition to this, Pfizer will probably earn extra $25 billion from its COVID-19 treatment courses. This is a huge number. Alone, $25 billion revenue makes about 22% extra revenues for next year. If we correlate this to stock price, and don't forget cost of sales seems very low, means high profit margin, Pfizer stock price can hit $70-80 next year. The company has a pole position. Its COVID-19 vaccine sales are increasing and developed a complementary treatment courses. This makes Pfizer a good pick in my opinion, and the stock price will very likely outperform the Merck stock price in 2-3 years. Pfizer will generate extra cash from its vaccine sales and will more cash flow in upcoming years. This gives a lot of freedom for the company. The company can acquire another biotechnology companies to boost its pipeline. By the way, Pfizer won't acquire BioNTech. I solved this question last year and the BioNTech CEO Uğur Şahin has rejected it. Pfizer is a good pick in pharma industry and will very likely outperform in upcoming years. Of course, this is my opinion and please do also your own research before investing. Thanks for watching till the end. Please give a like and don't forget to subscribe to our channel. Bye bye.